Ladies and gentlemen, welcome everyone and thanks for joining this Q2 FY26 earnings call for InfoBeans Technologies Limited. I hope I am audible to everyone. Siddharth, can you please confirm?
Yeah. Yes.
Good morning once again, and we welcome everyone and thanks for joining the Q2 FY26 earnings call for InfoBeans Technologies Limited. The results are available on this stock exchange. In case anyone does not have a copy of the same, please do write to us and we'll be happy to send over it to you. To take us through the results of this quarter, we have with us co-founder Mr. Avinash Sethi, Mr. Siddharth Sethi, and Mr. Mitesh Bohra. We'll be starting the call with a brief overview of the company's performance, and then we will allow the Q&A session. Kindly ask your questions by raising your hand after the brief overview by Avinash is over, and then we will address all the questions one by one. I would like to remind you all that everything said on this call that reflects any outlook for the future can be considered as a forward-looking statement and must be used in conjunction with the uncertainty and risk that we face. These uncertainties and risks are included, but not limited to what we have mentioned in the prospectus filed with the SEBI and subsequent annual reports. With the said note, I turn over the call to Mr. Avinash Sethi. Over to you, Avinash, and rest of the founders.
Thank you so much. Thank you all the investors for joining this call. Let me confirm, Supi, if you're sharing the presentation, I'm not able to see it. Is all the investors able to see it?
Yeah, I just do it.
See us. Okay. Are you able to see us?
Yeah, we are able to see you and hear you very clearly.
Okay, perfect. Now the presentation is there.
Yeah.
Please move to the next slide. For those investors who are joining for the first time, let me quickly brief you towards the transformation over the years of InfoBeans. I started in 2025 years in the making. The first 10 years were mostly foundational, and you can go to the next slide. The first 10 years were mostly foundational, and then the momentum started to build after the 2011-12 time frame, when we became senior level 3 company, revenue grew from 4 crores to 43 crores in the span of 8-9 years. And then we became a public company in 2017, acquired one company in the US in 2019, acquired another company in Pune in 2021, reached a turnover of 400 crores in 2023, in a span of 8 years, between 15 to 23. And then, from 2025, attained a level of level 5, onboarded Mr. Murthy, Manish Murthy as an advisory board, and also have a couple of senior folks, industry leaders like Navin Bhatia joining as CRO, and then Opal Perry joining as independent director. She's a CTO of EasyJet in London. So that's the journey we are on, and in the last few years, we've been investing in turning around the company in a way where we are ready for the new world, particularly the AI bandwagon, as well as having senior people, senior leaders on the board, so that we position ourselves as a very strong contender for enterprise business all over the world. Next, please. A quick overview on the numbers. The H1 financials, as that we can see here on the screen, is 254 crores, and EBITDA of 71 crores, a PAT of 46 crores, and a large amount of cash and cash equivalent in the business of 292 crores, which gives us a lot of financial strength. And we are growing at 24% CAGR since 2021, and we want to maintain a better rate of growth in the future as well. A lot of awards, particularly important award that we receive is the best companies for women in India and great companies to work for in India. I believe we've been enterprise heavy I mean, we have always been focused on large enterprises as our customers. So if you look at it as we are still a micro cap company, but we have 42 large enterprise clients as our customers. And that is where we drive our strength and a lot of repeat business coming from these customers, which also testifies the fact that customers like us and we are able to continue to generate repeat business from these customers. Next, please. These are the core set of services that we offer. Focus on AI-led engineering using a lot of tools around GenAI, Microsoft Copilot, Microsoft, etc. We also build in-house accelerators like Sona, which allows customers to adopt AI tools very, very fast. We also rely on two platforms, Salesforce and ServiceNow, to service our enterprise customers. Most of them have either both of them or one of these platforms implemented on their environment. And therefore, we get a lot of opportunities in terms of consulting on and integration pieces for these platforms. As on an industry focus, we are aiming to focus on BFSI and manufacturing world as well as storage and virtualization side of the business, which we have a strong presence in already. Next, please. The core team, again, most of you must have seen this slide multiple times, but for the for the interest of newcomers on the call today, we are the three founders. All of us are here today. We are in San Francisco area when we are getting this call, and our accomplished board of directors include Opal Perry, as I talked about, mainly. She's a VP of Marketing at Healthy Foods America. And then Sumer Bahadur Singh, he is a president of Boarding School Association. Next, please. Again, a very accomplished set of leaders, also long time at InfoBeans. Ram Lakshmi, Geetanjali, Manish, Tarunata, and Harmeet. They are the ones who look at sales and the client success part of the business. Next. Very strong delivery and people side leadership. Amit Makija, Denise, Raja Gopal, Kanupriya, and Arpit Jain. These are the leaders at the bank for delivery and for people interactions. Next. A very important set of clients and long association with each of these clients. Some of the names that we cannot really give out here because of these strong NDAs that we have. But if you look at IQVIA, which is a client for almost 12 years now, ABM is a client for 20 years plus. Ford Budget is a very successful product company and a client with us for almost 10 years now. Next, please. Yeah, quick financial update on how this quarter is went. Good revenue growth of 27% YoY as compared to last September quarter. We have delivered 130 crores of top line. EBITDA has also improved 57% from 23 crores to 36 crores. And PAT from 13 crores to 23 crores, a significant growth of 77% here. On a Q-on-Q basis, the revenue has increased by 5%. Let me also remind all of you that this 124 crores include 6 crores of employment retention credit given by the US government, which we applied in 2022 and received after 3 years. But that's increased our revenue as a part of other income. So we have a decent growth on Q-on-Q also if you don't include a one-time other income. EBITDA does not include that, so it's a good comparison from 30 to 36 crores of 20% growth here. And PAT is 24 crores to 23 crores, but as I said, it includes the ERC of 6 crores. So in effect, it is 18 crores compared to 23 crores PAT on a quarter-on-quarter basis. On the USD side, if I look at the revenue growth in the USD terms, then we have grown our revenue by 20% year on year. Next, please. And most of these growth has come from our existing customers who are expanding, and we are generating a larger share of revenue wallet from these customers. Coming to a little bit more detailed version of our P&L for September. Revenue from operations has grown from 98 to 225 crores on a YoY basis. EBITDA from 23 to 26 and PAT from 13 to 23. We've been able to have a decent handle on the total expenditure, including the employee cost. Revenue has grown up fairly well, and the cost has been able to contain to a good level. And that has happened because we have improved our utilization levels. We are able to time our hiring of lateral hiring from the market in alignment with our sales pipeline. So that also help in improving the margins. And as I said, all the clients, the key clients have been growing across US, Germany, and Middle East markets. So good overall growth in our directions. Next, please. Here is a snapshot for H1 comparison from H1 this fiscal year to H1 previous fiscal year. 202 crores in September 24 versus 254 crores in September 25, at 26% growth. EBITDA from 42 to 71 and PAT from 20 to 46. So again, a decent momentum that we are getting in our business this year. In USD terms, in H1, the revenue has grown by 19% year on year. Next, please. A detailed analysis of the balance sheet. Typically the non-current assets, the momentum is about minus. There's a reduction of about 8 crores of capital and the non-current asset, but there's a significant increase in the current assets. That's mostly because of increase in investments in the mutual funds and increase in trade receivables and increase in cash equivalents. On the other hand, there's a reduction in the in the equity and liability side, there's an increase in profit of about 48 crores. Dividend paid is reduced from here, and buyback of shares around 10 crores that reduced for. On the non-current liabilities, we have reduced lease liabilities to a point of about 3 crores, and then there's a reduction in strategy reduce of about 4 crores, which is typically the tax part. So not much of movement in the asset side. Next, please. A quick market breakup as to how it is growing in our different geographies. And quite interestingly, Europe is showing a revenue share of 31%. It is growing very rapidly. And US is at 56%, which is contained at this number. UAE is also growing at 8%, and the rest of the world, which includes India, is about 5%. InfoBeans Cloud Tech, another update here is that InfoBeans Cloud Tech merger application is submitted to NCLT, and we hope the merger to conclude in next 6 to 12 months. Depends on how the speed of the government department is, but all the paperwork is done and the process is already initiated. InfoBeans Cloud Tech is having a revenue share of about 11%, but the profitability is pretty good. So it's a good business to add on. It's a good Salesforce practice to add on to the business. Next, please. Very happy and proud to say that we are named as best companies for women in India and this is the 4th year in a row. And we're also honored as Asia's Best Employer Brand for the 9th year in a row. So the conferences that we attend typically on the AI side, next please. And we are investing heavily on the AI and being attending and being present at a lot of AI events. We're also trying to partner with some AI startups so that we can serve customers better. So multiple such events that we've been attending. ServiceNow, again, a very important partner for us. We continue to assess slides. And yeah, so I think next. So we have been expanding our CSR effort in Pune also. There's a new center which was setting up 2 batches of students from entrepreneurs background to train them to become employable in a period of 1 year. And there were also 2 batches which got graduated from the program in Indore and Pune, which also are placed in software companies in both Indore and Pune. We want to take over and talk about the foundation for the for the first step. Yeah. So InfoBeans Foundation, again, people who are new to the meeting today, InfoBeans Foundation is a flagship of the brand that we conduct as a part of our CSR activity. We started this in 2019, where it's a 1-year full-time course, which is free for underprivileged students, typically final year students of BSc, BCom, MCA, GCA, and degree courses. And we train them for 1 year on software programming languages and English as a communication language, so that they become employable in IT companies. And we are so happy to tell all of you that we've been able to deliver a success rate of 90% for these students. Today, at this point in time, there are more than 200 students being simultaneously trained across 5 centers in Indore and Pune under this program. So it's a very successful program when people are whose family income was less than 3.5 lakh rupees. There are students who have now been, after like 1 year of program and 2 or 3 years of service, they are at the level of 20-25 lakhs a year kind of salary. So very successful program, and that's how we are expanding every year. We started with just 20 students. Today we are training 200 plus students in a single year. So it's a very proud achievement, I would say, for InfoBeans Foundation, both in Indore and Pune. The other thing that we do, next slide, the other thing that we do is on the CSR front is to plant trees in cities where our offices are, so particularly Indore and Pune. And as an exercise, as a regular exercise, what we've done is for every team member's birthday, on their birthday, we plant a tree. And we also issue a certificate with the QR code, scanning which you can see the actual location of the tree and how it is taking shape over the years. So for this quarter, we planted 382 trees for our team members. Next, please. Again, a very important milestone on the sustainability side, which our European customers and American customers are demanding from us in every RFP, that where are your sustainability efforts? And with all the work that we do, and we've been doing over the years, we applied for this EcoVadis certification, and we are proud to say that we received a very good rating here. And they recognize us as a committed company towards environmental sustainability goals. And that is where, it's a good achievement that we have been able to secure. And our customers are happy to see these ratings from EcoVadis. Next, please. So next we talk about the market data as of 30th of September. Our share price was 472 rupees and the market cap was 1147 crores. The equity holding with the promoter group is about 74.4%. This is after the buyback. And the public holds about 25.6% shares. That's pretty much it for the presentation today. We can open up for question and answer. Over to you, Surabhi.
Thank you, Avinash.
Yes. Good morning. I thank you everyone for joining today's call. Participants are requested to please use raise hand feature to join the queue. And when it is your turn, please unmute yourself and proceed with your question. We further request participants to please limit your question to one at a time so that we can accommodate as many participants as possible. You can rejoin the queue for the follow-up questions and we'll be happy to address your questions if the time permits. Thank you for your cooperation. Let's proceed with the first question. So first question is coming from the line of Mr. Ankit Kumar. Ankit, please unmute yourself and proceed with your question, please.
Hello, sir. Am I audible?
Yes, Ankit.
Yeah. Thank you for taking my question. Congrats for a good set of numbers. Sir, given we have such a strong annuity type of business, can you comment how are demand shaping up for Q3 and Q4, basically second half of this year?
Sure, Ankit. The business momentum is there. If you look at the Q1, March quarter, June quarter, and September quarter, we are building up the momentum. And every commentary, every investor call, we say that there is a good demand seen, like we see from all the three geographies. Even at the macroeconomic environment for the rest of the, I would say, large IT companies is not really affecting us. So that's a good news. Our clients are asking for more work, even in the AI space. So that's also working in our favor. And we are able to build the momentum on the larger ones, the larger clients on the ServiceNow side, Salesforce side, as well as the digital transformation side. So I think it is going well for us. Plus, as I mentioned earlier, the utilization levels are also in good shape, which is also helping us. The other thing is that we are able to add about 98 people in this quarter, which is a significant growth for us. Last quarter we had a reduction in headcount, but now we are also able to attract a good number of talent in time to be able to service our clients. So I think the momentum is good. Obviously I cannot give you guidance and numbers, but we see good demand from all directions.
Sorry, just to follow up on this, can you comment basically how much is order book grown? So any color on magnitude or which you can share?
So I think in the previous calls, I keep mentioning that order book is there, but order book for us, like the projects are like 6 months, 9 months kind of projects. We don't have a multi-year order book with us. And that, that does not allow us to predict and give us, exact numbers of the order book. But with the experience that we have, with the kind of repeatability that we generate from our customers, we are fairly positive that, we will be able to continue the growth from here. So yeah, it is very difficult to give those numbers for us.
Sure, sir. I'll join back the queue.
Thank you.
Thank you. Thank you, Ankit. So next question is from Mr. Sumukh. Sumukh, please unmute yourself and proceed with your question.
Hi, so thanks for the opportunity. So my question is your on your growth is around 27%. So may I know what is driving this, sir? Because when I see your number of clients is relatively flat from FY23. So is it that is there a pricing thing, or is it that you're getting more work from the existing client, or what is it, sir? Any light on this would be great.
I'm sorry, I couldn't clearly hear you out. What you're asking, if I understand correctly, is that what are the growth? What are the factors contributing to your growth? Is that the question?
Yes, sir, correct. So is it pricing, or is it more work from existing clients, or is it more client wins? So what is it with respect to that?
I think it is a combination of both, adding up new clients as well as growth from the existing ones. So yeah, these are both the factors are contributing to the growth of this business. And typically, as a nature of services business, new clients start with a small value of a project, and once they find the deliveries is good and beyond their expectations, then they start to give you more work. So it is a slow growth trajectory of a new client. But then at the same time, once the growth factor is faster after the first project delivery. So that is how the services business works.
Okay, sir. That answers my question. Thank you. I'll get back in.
Thank you. So next question is from Mr. Srinivasu. Sir, please unmute yourself and proceed with your question.
Hello.
Yeah, hi, Srinivas.
Sir, my question is about agentic workforce that you are working with ServiceNow and Salesforce. Are you seeing demand from this agentic workflows? And if you are working on that, are you seeing a margin uptick due to this AI-based workflows?
I'll take that question. Thank you, Srinivasu, for your question. I think AI and agentic workflows are the buzzwords that we are seeing today in the industry, and we are no laggards to this. We are very much at the forefront of these technologies. We are working with a significant set of clients when it comes to AI and agentic AI. So yes, we are seeing significant demand, and at the same time, we are upskilling our team. We are investing in these technologies. We have hired people who have significant experience in this, and we are delivering solutions to our clients, including but not limited to POCs, accelerators, and of course, end use cases. So yeah, this is a very exciting field, a very upcoming field, and we are very much part of this thing. In fact, we have taken this opportunity over the last 2 or 3 quarters to completely pivot our positioning in the market as an AI-first organization. We have significantly enhanced our AI footprint and our knowledge base in this field, and we are consulting with our clients and creating new use cases for them so that they can take them to the market. So yes, it is an exciting time for us on this front.
Are you seeing any uplift of margins due to this AI deal?
In terms of margins, at this point, we are trying to invest more in this. Margins is a secondary thing for us when it comes to AI. However, we are significantly, again, investing in using AI tools within the organization for our development work. So in that sense, yes, we are trying to improve productivity. At the same time, it increases velocity for us. And it also allows us to go to market faster than the rest of the industry. So, but margins per se, I would say, is not a primary concern here. The primary concern is to get ahead in the race, invest very heavily, and take this thing forward for the next 5 to 10 years of the AI revolution.
Thank you, sir, and best of luck.
Thank you.
Thank you.
Yeah, thank you. Next question is from Ms. Nishita. Ma'am, please unmute yourself and proceed with your question.
Yes, hello.
Hi, Nishita.
Yes, hi. So, I just had one question. How many new clients have we onboarded? You mentioned that addition of new clients was also a growth driver for the revenue in this quarter. So, how many new clients have we onboarded?
On an average, we've been adding about six every quarter. So last quarter also we had six, and this quarter also we had six. Out of that, I think both of these probably had three large ones, each of the quarters. So, out of those 12 new customers in the last 6 months, we had about six large customers. I think what is important to us as a company is, are we able to get larger accounts? One. Second is that once we have those accounts, can we expand into those accounts at a faster pace and increase our wallet share of their IT spends? So that is our focus. I think we are going in the right direction at this point in time.
Okay, so do we plan to keep to this run rate of adding 6 clients every quarter?
No, I don't think this is a pattern that we can stick to. We're happy to have more, but it doesn't really matter. As I said, if I get one big customer and if I'm able to, have a potential of bringing that account to, let's say, $5 to $10 million in the next couple of years, I'm happy to have just one only. So the count does not really matter to us as long as we know that whichever number of customers we are getting, they have a large potential for us.
Understood. And if you can give any guidance on the revenue for FY26 and EBITDA margin, like what do you plan?
Don't give any guidance on the revenue side and also on the EBITDA side. But as a company, our goal is to have at least 24% EBITDA margin maintained. So currently we're doing better than that. But, as I said, that is our target. That if we are able to deliver a 24% margin consistently, then we are doing a good justice to the business.
Okay, understood. And just last question, it's just a clarification. You mentioned that you've added 90 employees. Did I hear that correct?
Yes, 98 in the last quarter.
In the past quarter, in Q1, in Q2, we added 98 employees.
After September, we added 98.
Sorry, actually, your voice is breaking.
July to September, we added 98 net addition into the company. And I said net after addition.
Okay, understood. Thank you so much.
Thank you. So we have next question from the line of Mr. Rupesh. So please unmute yourself and proceed with your question.
Yeah, thank you. Thank you for opportunity. And it's good to see all three of you together. I have got a few questions. Most of them are short. I'll quickly ask them. So what is the utilization level, Avinash, in this quarter? That is question number one. And the broad...
81%,
Sorry?
81%.
Okay. So I think 3-4 quarters back also our utilization was, I think, 79%, and the margin, I think, was significantly lower than where it is today. So it looks like you finally, I think, have managed to get the pyramid right. So some comment around that. How are you? I mean, are we at the other end of the pyramid now, that where margins are looking very high due to high utilization, or this is now like the equilibrium? Some comment around that. Then I think salary hikes are, I think, in October. So some color around that, what kind of employee expense run rate we can see. Then I think last quarter you talked about 2 AI accelerators, Stanza and Expona. Some update around that and what more we are doing in this field. That is another question. Then I think Europe has grown very well. I think Europe was 28% in Q1 and now it is 31% in Q2. So do you see this sort of growth momentum to continue, and can Europe become 40-50% in 2-3 years? Then I think we had always had ambition of doubling our revenue every 3 years. I know macro and other factors led to pausing that journey for 1 or 2 years. But do you feel confident now that you are back on track in that journey? And in that context, also, if you can give some color about acquisitions, how many deals are on the table, what are you looking at? And then the final is some update on Indore IT Park project. So these are all my questions. Sorry I asked them all at once. Yeah, thank you.
Thanks for doing a good amount of homework and tracking the company first. Second is, with all these questions, I will invite you to the north so that we have a one-on-one discussion. And I'm assuming all of these answers will take more than an hour.
Sure.
But to give a big picture here, that yes, the momentum is good. Yes, the goal continues to be grow at a faster pace with a combination of organic and inorganic means. Yes, we're doing better in terms of margins. The utilization levels are improving. But it is not just only utilization level. It is also a factor of revenue growth. I think we talked about in the past, maybe 3 quarters ago, that there is a certain threshold amount of expenses that you have to make in order to run the ship, and any income beyond that adds up significantly to the profits. So I think we are now crossing that number fairly well, because if you notice, the 100 crore revenue was just meeting the threshold of the business for the most part. Any significant growth from there is adding up to the bottom line directly. So obviously, it's not just only the optimization. It is more than that. It is good revenue growth in the client, expansion into clients, and a lot of other things. I think we've talked about it in the past also. So having said that, yes, we've been able to break the stigma of that 100 crore quarter and quarter. We have also done a lot of strategic changes in the business. We've sharpened our focus. We are investing heavily in the sales side for a larger organic growth. We have also been able to pass on a lot of the cost to the customers. Yes, there is a pressure of appraisals every year. The appraisal actually have been in effect now from October 1st onwards. And the overall impact to the cost would be about, to the employee cost would be about 11 to 12% on the employee cost side. So yeah, that is there. As I said, sales expenses are also there because they are hiring aggressively in all the markets, German and US, North American market, German market, and Middle Eastern market, which is also resulting in revenue growth. So it's a environment where we continue to invest in sales. We see good momentum. We're able to I would say break the hurdles that a larger market, the macroeconomic situation, macroeconomic situation is creating worldwide. So we are able to counter that well. So having said that, I'm very positive that we should be able to maintain our EBITDA margins and maintain our growth rates and the revenue side.
Yeah, how about AI accelerators, acquisitions?
Yeah,
Indore project, yeah, maybe some of them you can just quickly touch, yeah.
Are you able to see me okay, hear me okay?
Yeah.
Okay, perfect. See, one of the things, and Siddharth touched on this earlier, when it comes to AI, one of the biggest advantage that we carry is our strong presence in the Silicon Valley. We are very close to where cutting edge innovation is happening. And again, just to add a little bit of a color to that, AI has gone beyond your regular large language models or LLMs or ChatGPT that you often hear about. There is a lot of movement towards context-aware AI. our team is already starting to work in that direction where we start to integrate not just the text, but also the imagery, which includes both the pictures and the videos, and also the audios. Now, between voice, picture, imagery, and text, that's what creates a larger context sensitivity within AI. For us to be able to do the research today, do the pilots today, and be able to offer customer solutions tomorrow, that's sort of the pattern that we have been following. You appear to be someone who's very knowledgeable in the AI space. RAG, you might have heard of, retrieval augmented search. It used to be a new thing a year ago. We invested heavily in it. Expona, as you've been tracking, was heavily built using that. That is in use today. But we know that that's going to become a hygiene technology tomorrow. So that's sort of the pattern that we are following, and we're continuing to focus a lot of our energies on where customer needs are, where automation and AI combined can create that difference. And some of the new things that we are starting to look at. Enterprises, by and large, are still trying to move, and these are larger ships, move that entire ship from a certain era or age to this new era of AI. It's going to take a lot of work, and that's what we take a lot of joy and pride in. So I hope that addresses at least to part what you're trying to get.
Yeah, thank you. Thank you for that. Yeah.
So looking to the deadline, we would be able to take the last question. So that is coming from the line of Mr. Nishant. So Nishant, please unmute yourself and ask your question.
Hi, congratulations for the great set of numbers.
Thank you.
So I studied in Indore and I've been tracking your journey since last decade. And I'm being a shareholder and very proud of you, like a company coming from Indore, right? Reaching those milestones. So my question was on the CapEx side. So I have read that you've been doing some CapEx around like facility building or some premises or something. So I just wanted to know like what is our core focus, right? So there would be some gestation period in that. And yeah, just wanted to know more on that.
Yeah, so Nishant, again, I invite you to our facility in Indore since you are there. We are in Crystal IT Park. Since it is a huge premises, and we've been looking at the development in the city, and we were looking at building our own campus. So this is a place that we have won in the tender, and the tender was for Pardisipura IT complex. I don't know if you're aware of that. It is in the electronics park. So we got 3 acres of land where we should be able to build 4 to 5 lakhs of square foot of IT park. And the idea is that InfoBeans can consume at least 2 lakh square feet there and build it to suit our needs to be able to create a world-class facility so that our credibility in the eyes of our customers and our stakeholders, including our shareholders, our employees, and our vendors, should enhance the image of the business. And we've seen that it helps grow the business faster. Typically, a services business depends heavily on the trust factor, and a very good quality campus strengthens that trust factor in the mind of the buyer, also in the mind of the customer. So in the current IT park, in the Crystal IT Park, we are limited by the infrastructure in terms of how we can upkeep it, maintain it, have certain sustainability practices, which we cannot do there because we don't own it. We want to do all of that in our new IT park. And it should also become a landmark in Indore. So that's the idea. And since there's hardly any cost of the land, we should be able to. We did a lot of math around it, and we figured out that we should be able to recover the cost of construction in like 11 years if we, at the current rental price that we are paying at Crystal Park. So that's the math that we did. And because of the business credibility enhancement, we said we should go ahead and do that.
Okay, great. So it won't impact our cash flows as such?
It would not, because we also take some debt. And as I said, we are generating good amount of cash, so it should not hurt us in any way.
Okay, great. Thank you. See you soon in Indore.
We look forward to that.
Yeah.
Thank you, Nishant. Thank you, participants, for making this session interactive. Over to you, Avinash and Surbhi.
Thank you so much. I like people who do a lot of homework, and they've been tracking us for quite some time. And I invite each one of you to come to Indore. We'll be happy to interact and show you around the campus and answer all your queries, which you would otherwise not be able to get answers to. Look forward to continue to get your support, and see you soon. Thank you so much.
Thank you, everyone. And now you may disconnect your lines.
Thank you. Bye.
If you found this video helpful, please like, share, and subscribe to Concall India for latest upcoming Concall.